Welcome to Deep Dive. Today we're looking at the final massive financial event that closed out the year. I mean, it's so huge. It really sets the stage for the next decade of AI development.
It really does.
We are diving deep into what is now the largest private funding round in tech history, SoftBank's full, successful commitment to OpenAI.
And this is more than just a big check. It's a strategic realignment. We're talking about a $41 billion commitment and what that means for technology, for corporate strategy, and maybe most importantly, for macroeconomic forecasting.
A $41 billion bet.
It signals a fundamental pivot in the global compute war. It forces you to look at the sheer scale required to actually go after artificial superintelligence.
Okay, let's unpack this. We've been watching this unfold all year, and the final piece just dropped. What was the core announcement that sealed it?
So the closure happened on December 26, 2025. SoftBank Group Corp completed the second and final tranche of its commitment to OpenAI. This was the big one everyone was watching.
How big?
$22.5 billion.
Wow. $22.5 billion.
Yeah.
In a single transaction.
Yep. And you add that to the $7.5 billion they put in during the first closing.
So SoftBank's part alone is $30 billion. But the total round was even bigger, wasn't it?
It was. The final aggregate round hit $41 billion.
31.
The deal was just so magnetic. It was upsized, heavily oversubscribed. It pulled in an extra $11 billion from third-party co-investors who, just had to have a piece of the action.
And that $30 billion from SoftBank, where did that actually come from? I mean, that's not just sitting around in cash.
That's a really important detail. The entirety of it, the first $7.5 billion in that massive second tranche, it was all funded through SoftBank Vision Fund 2, SVF2.
So they've now fully satisfied their commitment.
They have. And their aggregate ownership in OpenAI now stands at a very significant 11%.
An 11% stake. That makes them the primary capital partner, really taking on a burden that maybe others weren't willing to.
For sure. But despite this intense financial pressure, the executives framed it as a philosophical partnership.
Right. I saw the quote from Masayoshi-san. He emphasized they're deeply aligned with OpenAI's vision of ensuring AGI benefits all of humanity.
That alignment narrative is crucial. But the subtext is all about scale. Sam Altman praised SoftBank's belief in AI, but he specifically called out their global leadership and scale, which he said helps OpenAI move faster.
And in this race, speed and scale are everything.
They're the only things that matter. SoftBank's capital and the dramatic things they had to do to raise it, that shows you the commitment to pure acceleration.
So stepping back for a second, why does a company like OpenAI even need $41 billion in fresh capital? They already have this massive partnership with Microsoft.
The answer is just, the sheer operational requirements. You're serving 800 million weekly ChatGPT users.
800 million. That's a staggering number.
It is. And that's not just software development anymore. That is planetary scale infrastructure.
And training the next models on top of that. It demands a level of compute that has never been aggregated before.
Exactly. And that brings us to the foundation of this entire deal, the Stargate project.
This is the joint venture.
Right. OpenAI, SoftBank, Oracle, and MGX. They announced it back in January of 2025. And this project isn't just a big investment. It's a plan to invest up to $500 billion in AI infrastructure by 2029.
$500 billion. I still can't get my head around that number.
No one can.
It makes sense that Masayoshi-san is the ventures chairman then. This isn't just one of SoftBank's bets, this is SoftBank's bet.
It's central to Sun's personal mission of realizing artificial superintelligence within 10 years.
And this massive commitment leads to that strategic shift you mentioned, the pivot away from Microsoft.
Yes. Microsoft is still an essential technology partner, of course, supplying clouds, access. But they are no longer the primary capital provider for this next leap.
I remember Nadella signaled that publicly. Microsoft was sticking to its $80 billion CapEx projections.
Which is an enormous number. But it just wasn't enough to accommodate what Stargate needed.
So Microsoft basically drew a line in the sand. We're in, but we're not going to bankrupt ourselves for your most aggressive goals.
That's the read. And SoftBank stepped right into that gap. Stargate is now heavily financed by them. And the implication is clear. OpenAI expects Stargate to support 75% of their computing needs by 2030.
Wow, that's a complete reversal from their current reliance on Microsoft. SoftBank is now driving the physical build-out.
They are.
But hold on, unlocking this money wasn't simple. SoftBank's commitment depended on OpenAI making some big structural changes, right?
It did. The funding was contingent on their transition to a full for-profit corporation that finally happened in October.
And they also adopted that PBC structure, the Public Benefit Corporation.
That's the fascinating part. It's for their commercial arm. It's a mechanism designed to institutionalize accountability, to legally enforce that AGI benefits all of humanity mission that Sun talked about.
A way to handle the criticism about them commercializing so quickly.
It's exactly a corporate third way.
So they pull off this huge restructuring just to unlock the money. But the act of raising that money itself, that put immense strain on SoftBank.
Oh, absolutely. The sources say they were racing to close that final $22.5 billion tranche by the year-end deadline. This was not easy liquidity.
You can see that strain in the assets they sold off.
This is where the story gets really dramatic.
Yeah.
To marshal these funds, they sold their entire $5.8 billion stake in Nvidia.
Wait, their entire stake in Nvidia, the stock that basically defines the AI revolution.
Gone. Sold to fund their stake in the company building the models. They also dumped $4.8 billion of their T-Mobile stake.
So they slowed other deals too.
They slowed almost all other Vision Fund deals and took out margin loans against their crown jewel, ARM Holdings.
This sounds less like a choice and more like a forced liquidation.
To feed the Stargate beast. It underscores the do-or-die nature of this bet for Masayoshi Son. He is liquidating current winners to bet everything on future intelligence.
So let's break down why this capital is so critical. What do OpenAI's financials actually look like now?
Well, it's a study in contrasts. Revenue is projected to more than triple this year, from about $3.7 billion to over $12.5 billion.
And that's all driven by ChatGPT.
Mostly. And it could hit $28 billion by 2026. That aggressive growth is directly because of this SoftBank spend.
But the cash burn is the other side of that coin, and it must be just as massive.
It is. The burn is forecasted to grow to nearly $7 billion this year, and it's expected to peak at an eye-watering $20 billion a year in 2027.
$20 billion a year.
And total costs between now and 2030 are projected at $320 billion. Model training is over half of that.
Okay, that $320 billion figure, that's why they had to go beyond Microsoft.
It became an absolute necessity.
So the SoftBank money is going directly into what? Dirt, concrete, power grids, and chips.
Pretty much. We know the $500 billion Stargate project is moving fast. They just announced 5 new data center sites.
And what does that put them at, capacity-wise?
They're on track for nearly 7 gigawatts of planned capacity, on the way to the full 10-gigawatt commitment.
To do that, you have to lock in suppliers for years.
And they have. This is critical for anyone watching the hardware sector. AMD is committed to supplying up to 6 gigawatts of its Instinct GPUs.
And isn't there another part to that AMD deal?
There is. Here's the kicker. OpenAI has an option to acquire a 10% stake in AMD if they hit certain milestones.
That is a deep partnership.
And at the same time, Broadcom is set to supply 10 gigawatts of custom hardware. These aren't just purchase orders. It's a deeply intertwined, multi-year supply chain commitment.
Okay, this is where the story starts to leave the world of tech finance and actually enter your daily life. This massive, hyper-focused capital accumulation, it isn't just boosting tech stocks. It's causing real structural friction in global finance. And you should be paying attention to this.
Right. This brings us to the academic perspective. The theory behind the reality. The concept is called the strategic wedge.
The strategic wedge. Okay, explain that simply. What's the mechanism here?
Okay, so think of it like a global zero-sum land rush for future automated labor. The model assumes that once AGI arrives, control over that AI labor, the new economic engine of the world, will be allocated based on how much wealth you have right now.
So your share of the future is based on how much capital you can hoard today.
Exactly. So if you're a person or a corporation that can save aggressively, you must do so to secure your future. It creates a competitive dynamic.
A panic to hoard present capital to guarantee future dominance.
Precisely. And this panic saving creates a fundamental divergence, a wedge in capital markets. On one hand, you have this overwhelming accumulation of capital, which drives down the productive return on that capital rental rate. Too much money chasing too few current projects.
Okay, that's classic economics. More capital, lower returns.
Yes. But here's the new wrinkle. Simultaneously, the interest rate rises dramatically because the interest rate is no longer just about inflation or central bank policy. It starts to reflect the immense strategic opportunity cost of not holding cash. It compensates you for postponing consumption to secure that future AI labor share.
Wait a second. So what you're saying is the race for AI could be actively causing the interest rate you pay on your credit card or your future mortgage to go up, regardless of what the Fed is doing, simply because extremely wealthy entities are hoarding cash to buy the future.
That is the direct consequence of the strategic wedge. Right. The models show that one-year rates could potentially hit 10 to 16% in this kind of scenario.
That is a profound distortion.
It's non-traditional structural upward pressure on rates years before AGI is even here. Yeah. The strategic value of capital is dwarfing its productive value.
It just raises fundamental questions. I mean, how long can the system sustain a dynamic where the cost of money is so much higher than the actual return you get from investing it?
It creates enormous pressure. And that pressure, combined with SoftBank's immediate needs, brings us to our final segment.
It's time to look at the tension between SoftBank's huge AI bet and its extreme capital strain. This is the segment where we pitch an outrageous but plausible trade idea derived directly from what we've just discussed.
Okay, the thesis here is what we're calling the liquidity compute arbitrage. On one side, SoftBank has its 11% OpenAI stake, but we just detailed how they are facing severe immediate liquidity strain. Forced sales, huge debt, margin loans.
All to finance Stargate.
Right. And on the other side, Stargate's hardware demands are accelerating, creating a guaranteed massive river of revenue for its core suppliers.
So you bet against the stress of raising the money and for the certainty of spending it on hardware.
That's the action. The idea would be to short SoftBank SFTBY, or 9984 on the Tokyo Exchange, anticipating near-term pressure from financing from margin calls from the threat of more asset sales. And at the same time, take a leveraged long position in a primary Stargate supplier, specifically AMD.
And the plausibility of that trade rests entirely on that supply chain lock-in we just discussed.
100%. AMD is supplying up to 6 gigawatts of GPUs. OpenAI has a potential 10% equity stake option. That tight coupling to OpenAI's accelerating compute budget, well, it gives you a direct, insulated channel to profit from the Stargate buildout.
It's an arbitrage on financing stress versus guaranteed demand.
A clean one.
So, to recap, SoftBank's $41 billion commitment is officially closed. They are now the primary capital partner in the $500 billion quest for Stargate. The focus shifts entirely to execution, to the race for ASI.
And you listening have to internalize this concept of the strategic wedge. This investment has cemented a financial pressure where the competition for future AI control is actively distorting global interest rates today.
The macro pressure is coming from the future, and it's warping the present.
It is.
So the question to mull over is this. What investment decisions are you making today that assume capital markets are behaving traditionally? When the reality is the pursuit of ASI by entities like SoftBank and OpenAI may have fundamentally broken that traditional model.
It's a complex and fast-moving system. We'll keep tracking how these historic capital flows impact the real economy and, ultimately your personal finances.
As always, this analysis is for informational purposes only and is not investment or financial advice. We'd love to hear what areas of AI infrastructure or macro friction you want us to unpack next.